thank you for your patience in the event today. And the event is held online, so unexpected situations like poor internet connections or technical issues cannot be avoided. Therefore, to ensure all audience have a smooth experience before the sessions, may I ask if you all hear me clearly? So please comment down below if you can hear me clearly. So let me check the comment. Okay, I see a lot of comment here. That means you can hear me clearly. Thank you. And also, please drop the comment below if you have any issues so that we can assist you immediately to ensure that everyone can follow the sessions. Besides this, if you notice any issues with my microphone that prevent you from clearly hearing what I'm talking about, so let me know and I can solve as soon as possible. And while waiting for more people to come, so I would like to have a few minutes to hear from you guys about your story. So how are your study or work? And can you share me anything you have experienced, such as your teammates and assignments, and also the deadlines? So please comment down. Feel free to leave a short line or a short sentence, and then we can context more before the session begins. So comment down and we will have a little bit of chit and chat. Okay, let me see the comment. Oh, don't be shy to say your story, guys. Oh, as I know that RMIT student finished the first week of the semester. So how are you guys? You guys have any trouble with your course recently? So just comment down, I will read it and share it with everyone. Oh, the freshman. Oh, tired. Oh, it's only the first week. Oh, newbie is great. Oh, so a lot of newbies here. Welcome to RMIT. Okay. So thank you for your all comments. And notice the sessions is about to start. Don't forget to invite your teammates to join these sessions. I guarantee that these sessions will be highly beneficial to you and your team, since you will be able to obtain useful information for your performance in IIC 2022 accompanied by helpful knowledge. And now let me have a quick check on the number of the participants today. Let me count. Oh, a lot of people here. Thank you to join everyone. And it's our pleasure to see all of you guys here. And now, pay attention. Without any further delay, we are officially welcome you to training session 1 for the Intelligence Investment Competitions 2022. And to introduce myself, I'm Lê Huỳnh Nam Phương, or you can call me Nam Phương. And it is my pleasure to be the host of our training session 1 today. And on the behalf of IIC organizers, I would like to sincerely thank you for setting aside your time to join with us today. Via training session 1 today, we also thank our sponsors for your accompanying for the IIC 2022. And we are truly looking forward to our cooperations in the future. To respond to your continuous encouragement and assistance, our organizing team is making very effort and doing our best for the smooth operations of the nationwide IIC 2022. And next, we will move on to the purpose of the training session 1. Okay, the purpose of training season 1 is to prepare candidates for the first round by providing them with technical analysis in stock trading. Furthermore, participants will also learn how to use the online trading platform for the stock trading round. And next, I will introduce a little bit about the agenda in today's sessions. We will have firstly is introductions. Secondly is training sections, technical analysis. Thirdly is Q&A. And finally is thank you and wrap up. And I'm so excited to proceed with today's sections. Also, I don't forget that we will have a short Q&A sessions at the end of the training session 1. So please let us know in this Q&A sections if you have any concerns or questions. And all right, firstly, I would like to introduce everyone to the guest speaker from training session 1. That is Mr. Trần Tuấn Kien, who is the trainer of IIC for 3 years, and he's working for FPT stock with 5 years experience in the finance industry. Especially, he got 2 research articles about technical analysis. So please give him a big welcome. And now, I would like to invite Mr. Kien to show up so everyone can see you now. Mr. Kien, are you there?
Yes, I'm here.
Thank you.
Good evening, everyone.
Oh, how are you today, Mr. Kien?
Yeah, well, today is I'm good.
Oh, yeah, me too. So hope we enjoy this moment. And now I will ask you some questions to break the ice between us. It's okay for you?
Well, yes, it's okay.
Oh, thank you. And so the first question is, can you share more clearly about your positions at this moment in FBT stock?
Currently, I'm the investment advisor, and I'm also a team leader of advising team, helping training new employees. Well, I started in the business at the end of 2017. So far, I have 5 years in the stock market. I've witnessed well, 3 market crashes, and I have experienced a big uptrends in 2020 and 2021. So it's like nearly all the emotions in the stock market. I can nearly have been through all of it.
Oh, so great. So can you give me the reason why you choose to be the leader or work in FPT stock?
At first, I see that there are a lot of securities brokerage firm, but FPTS has and we share the same point of view. Because in FPTS, well, they're not just training stockbroker. They are training as an investment advisor. Like the stockbroker, which as a stockbroker, what we do, which is connecting the buyer and the seller. But as an investment advisor, the requirement of the jobs are more complicated. We have to build a portfolio, do some analysis, make investment decision our clients. And well, I see that they have the same ideas that I do. So that's why I started still working with them. And after 3 years, I started building my own team. And right now I also have a small advisement team, and also training the new, training some newbies at my companies.
Oh, so great. So I hope all the candidates feel excited with your job at this moment. And great, Mr. Kien. So are you ready to share your knowledge?
Oh, yes, I'm ready.
Okay, so now the floor is yours. So please share your slide for them. Thank you. This is your floor.
Okay, shall we begin? All right, so the first session of the workshop, so we study about technical analysis. Then in the stock market, there are two main methods, fundamental and technical. In fundamental, we focus on the company's businesses, and in technical, we focus on the market price and the trends and the volume to make decisions. All right, the goals of this trainings, there are three goals. First, after this workshop, you guys can understand the concept of technical analysis. And secondly, you guys can understand the features, some important signals, learn some popular indicators and the basic rules to identify a stock trend. And finally, after it, I hope all you can analyze a stock or an index by using technical analysis. Okay, there are four parts in this training. First is the overview, and then we come to some definitions, some signals and applications of the indicators. Thirdly is some popular chart patterns to identify the trends. And finally, we study about the price and volumes. Okay, so the basic steps to analyze stock using technical is first we have to identify the stock trends. Then we use the indicators to figure out the signals, the buy and sell signals, and to recognize the support and resistance to find out the entry point when we buy the stock, when to sell it. Again, thirdly, we use the chart patterns to measure the targets, the potential targets. And during analyzing price, you also use the volume combined with volumes to increase the accuracy of our analysis. All right, let's start with the first overview of technical analysis. Well, we have to know what it is, the differences between technical and fundamental, and the philosophy of technical analysis. Okay, the definitions. Well, technical analysis is the method to predict the future price trends. We look at the charts, we figure out the trends, and we predict the future, where it could go. We do that by studying the past data, mainly the price and volume. So two informations we use in technicals are price and volume. We study the price and the volume to identify the trends, and we make decisions on a stock. And technical analysis can be used on many time frames, like a weekly or daily or hourly chart. So let me give you an example. Let's see. Okay, so here's the chart. There are two popular websites to do technical analysis. You can go to fireend.vn, or you can go to Fianda. But me, I prefer using the Fireend. So that can be used on many time frames. So this is for the daily chart. As you see, and the red and the green bars are called the candlesticks. Right. So each candlestick represents the information of one day. This is a daily chart. You can analyze on the daily charts. For the bigger trends, we can analyze on the weekly. All right, here's a weekly chart. You can look at the longer time frames, longer period. Or for short-term trading, you can look at a smaller one, like 4 hours. right? 4 hours chart. So each candlestick represents 4 hours period or 1 hour. Right? We can analyze on many time frame using some basic rules, and you can still use on many time frame to identify the trends of each period. Right. The differences between fundamental and technical. Well, like I said in the beginning, fundamental, we study about we analyze the businesses of a companies, what it is do, what's the income, how to generate income, what's its cost, the profits and financial ratios. Well, you guys all learn that at university, you study your major in finance. Well, the point of using fundamental is to find the intrinsic value of a stock. So like, for example, well, this picture is, I captured it last year. Well, this is our fat stock, HPG. Last year is still at a very high price, 60s, 70s. Right now, you can see it back. HPG has fallen to 17, from 70 to 17,000 shares. All right, well, this is just for example. So for example, we use fundamental analyze, for example, like for FAT, we can find that its intrinsic value is 100,000 dong per share, for example. And as we look at the price, the market price is lower than the intrinsic value. So we can make the decision that we can buy the stock. However, on the other side of technical analysis, we look at the price movement. So if we see the price is in an uptrend, when it still continue to going up, that's the moment when we make the buy decisions. Even when the price is going down, even how good the company is, we don't invest in it. We wait until it go back into an uptrend or it goes sideways. So that's a key point. Fundamental based on intrinsic value, technical based on the trend. Right? So fundamental, we buy when the market is below the intrinsic value. We sell when it exceeds the intrinsic value. For technical, we just identify the stock trends. We buy when the stock is in an uptrend. We sell it when it turns into a downtrend. All right, philosophy of technical analysis. There are 3 theories. Well, these 3 theories are called the Dow theories. You know, the Dow Jones, the man who create the Dow Jones Index. Well, he also has the theory. We call it the Dow theories. So 3 ideas of the Dow theories are the market discount everything. So in technical analysis, the fundamentals of the stock will reflect on the supply and demand of the investor. So like in the stock market, if the company is good, you know, they have good business, they are growing in sales and profits, and then the investor want to buy it in. You know, there's the demand of stock will rising because it's a good company, people will buy it. When they buy stock, they reflect on the price on the charts. The price gonna rise. Or even when there's news, some about good news or bad news, we don't know about it yet. But when we see the stock, for example, there's a bad news about the stock, we don't know what it is, but it is falling. So we see there's a sell signal on the chart, we get out of the trade. And when we later on, we saw on the news that there's some bad news happen. Like earlier this month, I mean last week, now some the stock in the real estate sectors, there's a very strong decline in the stock price. Well, the reason behind it is because, well, there's a risk is about the bonds. You know, they are real estate company, they borrow too much money, and the rising of interest rate can cause the high interest expense. The news when it come out from the media are usually late, you know. But some, what I say, some big investor or the market maker, they already know some news. They start to sell. When they sell it, it reflects on the chart. And when technical analysis investor, they look at the chart, they saw that the price of stock is getting lower. It break down from the nearest bottom. They saw the sell signal. They don't know what news that. They just know that, well, there's something bad happened. The price going down, we sell it, right? So the first theory is the price. They discount everything. The second theory is the price move in a trend, which means that trend from the past will continue in the present and in the future until there is some reversal signal. So like when you look at a stock, we see that's in an uptrend. Well, that uptrend will be continue until there's some signal that go to sign that give it the signal that the stock may reverse. If we haven't seen that signal, which means they are continue in uptrend. And finally, history tends to repeat itself. Well, because the stock market is the market of expectations, and two factors that reflect on the stocks are the greed and the fear of the investor. Well, if they see a good stock with good news, we have a greed. Now we have high expectation of a company, we buy in. Whereas some bad news about the economy, bad news about the stock, we start to afraid that companies will be bad business in the future. So they are investors are selling it out. For example, the stock market only move in a cycle. You know, in Vietnam we have kind of like have a 5-year cycle. You know, like the downtrend this year is look familiar in the 2018. Right? History tends to repeat itself, right? Here is the 2022 after a big uptrend stock market crash. Back to 2018. Well, after the big uptrend in 2 years, it's going back again. It happened the same. The impact may be different. Like this year, the impact is bigger than the 2018, but basically they move in a cycle. Nothing gonna rise forever, nothing gonna fall forever. Right? Now you look back in history during between this moment, media all have good news, and well, a lot of experts predict the market will continue to rise, but well, unluckily they falling back again. Right? And also to say, even in an uptrend, it lasts for 2016, 2018, 2 years. This one is the same, right? Because we human beings, we always repeat our action. Greed and fears always moving in the stock market. We saw good news, we are greedy, we buy it in. We have bad news, we are afraid, so we sell. And our behavior, acting in the cycle, so that also reflects to the stock market. Yeah. Okay. All right, so after the first session, we know what technical analysis is and the theory of it. So right now is more practical. We will learn about the definitions and signal and applications of the basic indicators to identify the trends, when and where to buy a stock. All right, the first three parts, trend, support, resistance, and trend lines. These three are used to identify the trend. The last two parts, the Fibonacci and technical indicators, is used to identify the buy and sell signal, the entry point and exit point. Okay, let's first with the stock trend. Okay, overall there are three types of trends: uptrend, downtrend, and sideways. An uptrend is classified as the series of the stock getting higher heights and a higher low. You know, like the peak and the trough in the bottom of the stock are getting higher. So that is an uptrend. A downtrend is the opposite, when the highs and the lows are getting lower. We call it the lower lows and lower high. In this moment, the sellers dominate. Well, supply are more than demand because, well, investor, they markets letting the stock or the entire stock market, they move into a bad condition of the business. So people are afraid that the companies will be in trouble. So they're not holding stock anymore. They sell it out. And sideways, it's a stage where the stock move horizontally, where the highs and the lows are equal. For example, in this case, the highs are the same. They cannot getting higher, and the lows, when they're falling down, they couldn't get lower. They move in the horizontal range. Right, that's for some case study. Okay. As you can see, in this year, 2022, the market is in a downtrend. See, they create lower lows and lower high. Right? The highs and the lows are getting lower. This is the downtrend. The last 2 years, 2020 and 2021, this market is creates a higher high and higher low. You see, during the trend, the stock or the index, they don't go up in a straight line. There's a go up and go down. There's a big uptrend, then a small downtrend, then it rises back again. So to identify the trend, we don't look at the daily price. You know? For example, look at the daily price, we cannot predict it. We have to wait until it creates a peak or a trough to identify the downtrend or an uptrend. But for example, in this case, the price going up, but we cannot say that it's in an uptrend. Well, unless if we see it getting higher lows. See, the trough are getting higher, and the stocks and the peaks also getting higher. And usually we will place an entry in here. Right? So like right now, in the market is in a downtrend, right? Since April 2022 right now, there is a small recovery, but it's still in a downtrend. Why? Because, well, the price is going up, but they create a lower high. So it is still in a downtrend. Right. So like in this place, the market seems to go up in 3 days, right? But is that enough to identify whether it's moving to an uptrend? You see, this is they're still creating the lower peak. The peaks are still getting lower, and you see the trough also getting lower. So there's not yet create they're not yet reversed into an uptrend. They're still in a downtrend. So when the stock will move back into the uptrend, it has to exceed this point. This is the 1070 point, right? The VN index have to move in here. You have to exceed this point. So we can call it into when it's, let's say, cross over the 1070 point, well, we can call it the stock can go into an uptrend. So far, it's still in a downtrend or a sideways. You know, if they can moving into a horizontal channel, like they're going, if they're moving from 1000 to 1070, it means they're going in a sideways trend. Support and resistance. So after we identify the trends, we have to figure out the support and resistance. These two things are also used to determine the entry point, like this. Support and resistance. Okay. Okay, here's for example for BVH stocks, companies in insurance, Bảo Việt. All right, support is the price level when the price are usually bounce back again. When it's going down and hit the support area or supporting level, it will go up again. And if it hit the resistance is when the level that resists will keep the price from not going up. When we hit the resistance, it will usually going down. So that's its definition, right? This support is the price level where the market, the stock or the market seldom falls. It usually create a trough and going up again. Resistance on the opposite side is the price level that the stock market seldom surpass, which means it cannot go further from the resistance, and usually it can go down again. Like, for example, I can get to the slide. All right, for example, for BVX, right? The case study is BVX. All right, for example, okay, let's start from case study. Identify the trend of the stock. All right, is you see the peaks are equals and the trough are equal to each other. So we can say that this stock can go in a sideways, right? The trend are sideways from 2021 to 2022 going sideways. If we look further, they're still in a downtrend. But so far in 2 years range, we've actually going sideways. So you see when the stock hit the 48, price of 48, usually going up again. So this is called the support, right? This is support, and this is resistance. Right? When price hit the support, it usually going up, and when it hits the resistance, it's usually going down. So how to identify the support and resistance? Well, we base on the previous peak and the previous trough. The trough is used as the supporting level, and the peak can be used as resistance. When the price exceeds the peak, right? For example, let's go back. Where is it? All right. For example, if the price exceed, we call it breakout from the nearest peak, like in 2018, right? It break out from the peak of July 2016. So this form resistance. The first is a resistance, but when it is broken, the resistance becomes supporting level. And you see, when the price go down into this previous peak, it bounce back again. So the resistance turn into support when the price break out of the peak. And in contrast, the supporting level become resistant when the price break out from the trough. See, in 2018, the trough of July is the supporting level. The price going here is it bounce back, but when it's going down here, it's breakout of the nearest trough, breakout of the support. Support will turn into resistance. See, when it's going up again, hit this, create a peak, and since then it's going sideways. So how to use that as an entry point and exit point? So you see, when you see the price, it hits the supporting level, we can buy in. And if it hit the nearest peak as is in here, the nearest peak, we can sell, right? So right now, this moment is, well, there's no signal to buy or sell. If the price going back here again, we can buy. And if it go right here, we can sell. Or if you guys can take a risk, right? Like this play is not so far from the supporting level. Let me guess how much it is. It is still, well, 12% so far. But in case it doesn't fall in right at the 48 price, but if go to like 50, well, 7% for supporting, well, that is close enough to open a trade. I can buy when we'll have to buy when it falling exactly to the support level. Well, we can buy it when it go down when they are near the supporting level, we can buy, and we sell when the price is near the resistance. Or if we have higher expectation, we can sell it when it hit the resistance level. Right, the role of support and resistance. A new expectation leads to new price level. This is when the market create a surpass, break out from the resistance. Well, then resistance becomes support. Several feature. The resistance and supporting level are usually the price range. It is not the specific price. Well, like in the BVH, I say that there's a supporting level at $48,000 per share. Well, it should be arranged, right? It's not exactly 48. It could vary from 47.5 to 48.5, or even 46 to 50. It's a price range. It is not an exact number. Well, that's why when we make a buy decision, we don't have to wait until it go down exactly at the support level. Well, we can see if the price is going down and it's 5% near the 5 or 7% near the supporting level. Well, we can enter the trade. It's based on our the ability of we taking risk. If you guys risk taker, we can go to trade early. However, conservative, we can wait to hit the support price. Right. Okay. Second one, how can I identify it? Well, we can use the peak and trough. Like that. I give you an example on the BVH. Secondly, is on the psychology level, like a round number. Right. You see in VN index, the price reacts when it hits the 1,000 points. So 1,000 point is the psychology level because it's a round number, like 1,000, 1,100, 1,200 points, or even 1,050 points. Right. So for the stock price could be 40, 50, 60, in 45, or 50, 55. That's a psychology level. Or we can use this as charge pattern, and indicators also used to identify support and resistance. The last two, I will explain it later in this after the break. Okay, some related definition. When I give you the example, I did say about breakout. Well, breakout is when the price cross over the resistance level like this, or it crossed below the supporting level. We call it a breakout. Right? When it breaks the support or break the resistance. A trade remorse is called a retesting stage. When it's go, for example, in this case, the price breakout and they're falling back again, and they after they go back, they go back to what is we call testing the new support, right? The resistance become the new support. Usually when the price going up, it will fall down again. Then after that, it will continue to rise. They don't rise. They don't usually rise immediately. Some cases, the stock rise immediately. It usually don't go to they don't reach our expectation targets. The price, a sustainable price trend is when the stock moving up and down gradually. So why there is a trade remorse? You see, was when the price going up here, have a strong increase. It will meet some expectation of investor, like they set the price target here, but the price moving. For example, if you guys buy in somewhere in here, you want to sell it at this peak, but the price is break out of the peak. It is over your expectation. Right? There's over expectation. Well, we have enough. We meet our expectation. We want to have a 10% return. Now the stock has a 15% return. We take profit. And when many people take profit, the selling force are strong. A high supply with low demand, the stock will fall in again. And then when it hits the supporting level, and people will start buying. Because when it's breakout, it creates a new trend. And when it's falling back, new investor will put the new trade when they retest the supporting level. So breakout and trade remorse. Usually, if you want to have a high return, you can start looking for the breakout signals, right? Because when the stock moving in a range, the support between the support and resistance level, the return is not very high. When it breaks out and it retests it successfully, the stock could go into a strong uptrend. Like example. Right. Let's look for a breakout. Okay. Scanning for some cycle stop breakout. Breakout, trade removals, and see. Like for example, like this DCM. All right, it's a breakout. You see, the breakout is when you see this part in July 2021. DCM stock breakout from the nearest peak. Then they have 2 days retesting. See, after the breakout, they have to stop for a while, retesting, going up, and retest again. Usually, the trade remote stage could be last for 2 to 3 times. 2 or 3 times retesting the trend. But over 3 times is a warning. If they retesting too much, the supporting level could be broken because it shows that the sell signal are still very strong, and the buying force is not strong enough. It's too weak to push the stock getting higher, and they tend to falling again. Let's see, it's another clear. Let's look for a downtrend. It's easy to find downtrends here. Okay, I can look for steel stock, right? Steel industry is very in a bad condition this year. They're moving to the big downtrend. All right, for example. All right, here's a downtrend. Right. See the price breakout below the nearest trough. It is bounced back again. However, see what this is called the noise. Sometimes it go bounce back again, and we thought that, well, it will continue into the sideways channel. So let me see somewhere I can retest. All right, here it is, this point. Well, you see, on May 9th, right, on May 9th, HPG stock has breakdown from the peak of January, the trough of January, right? Breakout of the resistance. See, there are small trade remorse. They're going up back again, and they start to fall on the 3rd day. So every time the price breakout of the support or resistance level, they usually going back to that to retest. We call it retesting trade remorse. So in this case, it retests the new resistance, and the price keep falling. Here you can see clearly. You see, it breakdowns going up again, retest. So in here is not the buy signal, right? It's a sell signal. So if you guys already hold a stock right here and you see it's breakdown of price, you can sell it right here, or you can wait. If you cannot sell it right the moment it breaks down, you can wait it going up to retest the new resistance, and we can sell it. So in case like we buy in here, right? Like somewhere we buy in here, somewhere in here, and the stock break down the supporting level. We wait until it recover, have a small uptrend, and we sell somewhere right here. We cannot sell right at the peak, but somewhere around here. And we wait. All right, trend line. Well, trend line is the line connecting the support and resistance level. Right. Okay, a trend line is a straight line that you can connect the lows and the highs together. Well, the same as the trend, there's on 3 types of trend lines: upward, downward, and sideways. An upward trend line is drawn when you connect the lows together. The downward trend line is when you draw the line across the peak. When the peak are getting lower, you draw a line, connect the peak together, and it create a downward trend line. For example, let's show on the chart. All right, start with a downward trend line. Okay, trend line is a straight line, right? When we can draw the line going through the peaks, and you can see there's a trend line. This is a downward trend line of a HPG stock. It is used to identify the resistance level. You see, if the price going up here again, usually it will fall back. Like in 2018, see there's a downward trend line here. Like you can see it clear in the past. Right, when you connect the highs in the downtrend, when you connect the peaks together, it creates a straight line. We call it a downward trend line. So whenever the stock are near the trend line, usually it will falling back. Right here, right. Connect the first 2 peaks, okay? When you draw a trend line, you see. When it hit the trend line, this trend line will act as the support resistance area. They have a strong sell force in here. See, it's also near the peak of June 2018. So there are a lot of resistance level in here, the trend line and the peak. So the price can hardly break out, will fall. During in this moment, at the end, from here to the end of the year, the stock I predicted they will continue in the downtrend. So if you put in a trade, you buy somewhere with great trough, and when the price going up and hit the resistance, just sell it. Don't wait for it to break out, because you know it took a very long time to have a breakout. See, like in 2018, when HPC have to create what 1, 2, 3, 4, 5, 6 peaks, and it took them 2 years to break out of a downward trend line. So right now, for example, in this moment back here, you see there's a downward trend line. So for example, if the price creates a trough somewhere around 12 or 13, you can buy. Well, that's a risky part, right? For example, like here, it may act like here again and go and bounce back. And it trade. Just let me copy the past pattern. Right, for example. But in case is, for example, if the price creates a trough in around 15 and it bounces back again, we can buy it. And when it hits the resistance level of the downward trend line, it's a sell signal, right? So in the opposite of the downward trend line, the upward trend line will act as the supporting level of a stock or an index, right? Whenever the price are near the upward trend line, it's usually going up again. See, even the breakdown, before the breakdown, it will to stop for a while, then it will break, right? So to identify supporting level, we use the upward trend line. To identify resistance, we can use the downward trend line. All right, let's go back to the slide. Right, how to use a trend line to identify trends, reversal signal, support, and resistance. Oh, reversal signal. Reversal signals is here. Reversal signal is when the price change from an up to a downtrend, right? For example, like here, this is a reversal signal, right? They continue in a strong uptrend. You know, there are many ways to draw a trend line, but we can start with the beginning. You know, the longer the trend, the stronger the support and the resistance are. So, for example, this is an uptrend. This is the reversal signal, right? Usually we don't try to exit here. For the big trend, here's the corner breakout. For short-term traders, well, you see that for shorter period of time, you can see here, right? You see there's a trend line here. There's an upward trend line. Price hit the support. To draw a trend line, we need at least two troughs for an uptrend, right? We have to wait on here, and we enter the trade around here. So when the price break down, you know, there are two sell signals. When it hits the nearest peak, this is a resistance, we can sell it here. And the price move here, they are still in the uptrend. You know, they may, what is called a retracement, a small downtrend when they hit the resistance. But if the price bounce back again, it still continue in the uptrend. But in this case, this is called the reversal signal from uptrend to the downtrend. This is the small downtrend, short-term downtrend. And the price continue to break the 2 years uptrend line, 2 years trend line here. But this is the big one. Turning from a long-term downtrend, turning to a long-term, turning from a long-term uptrend, turn it into a long-term downtrend, right? So if you want to buy Hòa Phát for a long-term investment, we have to wait until it break out of this trend line. Well, during the downtrend, there was some rising signal, some buying signal for short term. Well, we can buy it, and we sell it when it hits the trend line. When it break out on the downward trend line, that's when the stock is in uptrend. So far, Hòa Phát is still a downtrend. We can look for a short-term signal for trading, but to be sure, we have to wait for a breakout. We can have a high return. Fundamentally, Hòa Phát have a negative profit in the third quarter. So fundamentally and technically, HPG stock is still in a bad trend. Right, trading channel. Trading channel are the two parallel trend lines, right? For example, substance. Right, you can look for the trading channel. Right, so see, connecting the peak together, we got a downward trend line, and we put another parallel trend line here. What this is called a trading channel. See, the price moving in a downtrend, but they don't falling straight down. They still have some short-term uptrend. Right? They move up and down inside a channel. This is called a trading channel. For example, in uptrend here, I think there's a trading channel somewhere. Right. For an uptrend, they still have in the trading channel, right? Size small. The price moving in a channel like this. The trading channel itself can be used at the supporting and resistance level, right? Like, for example, if we see a trend like here, we could wait until it falling back to the supporting level, the upward trend line, right? If we use the trading channel only, maybe we don't buy, we will buy near here, right? It's near the supporting level. When we found two troughs, we can draw a line connected together in here, and it creates a trading channel, right? It is still near. How far is, how much close is this? 8%, 10%. Well, this is still close. It's quite close to the supporting level. So we can hit a trade here, and we can sell somewhere like here. Well, when it's break out, don't worry. Just when you put the when you buy here, we sell in here. When it goes up again, we can wait for a trade remorse to enter the trade back. Here is just a small, you see there's a small downtrend and it's a breakout. Well, here's the entry point where price breakout from downward trend line, and they'll continue in an upward trading channel. So for example, in this case, price is near resistance level. Well, this is the selling signal. You see, it can still have a small trading channel in here, right? You can have a small trading channel. This is called a resistance level too. So right now, if you want to buy CTG with Tin Bank, well, it is not a good time to buy. We have to wait when it near the supporting level, which is the peak. Well, it's break out from this peak. We test successfully. So if the price is near the 23 to 24, we can buy it in here, or we can wait for higher return. We can wait it to go down near the upward trend line, which is about 22.5 to 23, right? Buy the stock near buy the stock near the supporting level and sell it near the resistance level. All right. Okay, this is a case study for SKG. It's called Superdome Kien. This is a stock that do business in transportation. Now they're selling tickets for on the ship in Kienzang, from Kienzang to Phú Quốc. Well, this company do business on passenger transportation, and you see there's the price moving in a trading channel. When they break out, they're moving, have a very strong uptrend when they break out of the trading channel. Here's now an example of a trading channel. See, you draw a trend line and you add a parallel line connecting the peaks together, we'll find a trading channel. So when you put a trade, we skip the first two trough. This is used as a benchmark to draw a trend line. And we can enter a trade in here. We sell it here. We buy back in here and we sell it here. When the price breaks out of this channel, we wait until it retests the old resistance level, which means become the new supporting level, and we buy it. Okay, so let's have a break for about 15 minutes. Then we will continue to the second session. We will discuss about Fibonacci and some technical indicator to identify support and resistance level, as well as the buy and sell signal.
So at this moment, maybe our participants have useful knowledge for Mr. Kien sharing. And now your time to take a break, some food and drink. And after 15-minute break, we will continue to the other interesting and promising box. And okay, see you later. See you after 15 minutes.
been great pleasure to partner with Smart Tran and to work with your fantastic team. Thank you to be the pioneer in delivering CMA programs in Vietnam. IMA is ready to support Smart Tran, and together we can reach another milestone in success and in many more years to come.
Smart Tran is able to provide the internal audit community in Vietnam with an opportunity to prepare for the three-part CIA exam. We chose to partner with Smart Tran because they're a respected and recognized company in Vietnam and are committed to providing professional training services.
So welcome back. I hope you have a fresh up and ready for the part that you have been waiting for the most, right? And now, without any further delay, we move on to the next part. And now Mr. Kien will continue to share his training sections. So Mr. Kien, can you show your slides?
Okay, shall we begin? Okay, welcome to the second session of this workshop. We will continue on the definition of signals and applications, right? So after the first three parts, we learn about the trend, how to identify the trend, supporting and resistance level, how to draw a trend line, and to find out the buying and selling signals. The next one is we study about the Fibonacci. Right. So using trend lines and trends are just two ways to identify support and resistance. There are many other methods. Well, in case if you guys are quite confused to draw a trend line, the first time I learned about technical, I also have some trouble in how to draw a trend, how to draw a trend line properly. Well, we have another method to identify support and resistance level of a stock to find out the entry and exit points. Okay. The next method is using the Fibonacci. The Fibonacci is the series number. Well, like start with number 0, then 1, and you continue to adding up the current number with the previous number, and it can continue in the series like 0 plus 1 equal 1, 1 plus 1 equal 2, 1 plus 2 equal 3, and we have a serial of 0, 1, 1, 2, 3, 5, 8, 13, 21, and 34, etc. Right? Each number is the sum of the two preceding ones. By ignoring the first number, the ratio of any numbers and the number after that is 0.618. So like if you divide it, you use 3 divided by 5 or 5 divided by 8, 8 divided by 13. The ratio is nearly 0.618. And the ratio of any number to the second number after that is 0.382. So 2 divided by 5, 5 divided by 13, or 8 divided by 21. It will have the ratios nearly to 0.382. And the two numbers 0.618 and 0.382 are called the golden ratios. Now the golden ratios has been seen in many parts of the natures. See, there are several examples that we can see the Fibonacci ratios, like from the wave, from the human body, the proportion of our bodies, and from the horn of a goat. Well, usually in nature, when there is a Fibonacci ratios, you can be seen in many places, and so does in the stock markets. Well, because stock markets are built from supply and demand, and originally is from our natural behavior, from our investor. We human beings are part of nature, so somehow the Fibonacci ratios happen in the stock market. We can find it in the stock market or any kind of in forex, cryptocurrency, anything. in the financial market, we can see the Fibonacci ratios. So in technical analysis, there are two types of Fibonacci ratios: retracement and extension. For example, I will use for realistic case study. Go. Yeah. Right. So there are two types of Fibonacci: the Fibonacci retracement and Fibonacci extension. Fibonacci retracement is we measure the small trend. So like during an uptrend, there is a short-term uptrend and the short-term downtrend. The Fibonacci retracement measure the potential supporting level when the price falling down, or the potential resistance level when the price are in the downtrend. For example, in the downtrend, we measure the potential resistance of a stock, right? How to draw a retracement in the downtrend? We first need 2 points. We need to draw a peak and a trough, right? We use this Fibonacci retracement. We connect the peak and the trough together, and we can see some potential resistance level based on the Fibonacci ratio 0.236, 0.382, 618, and 0.5. 0.5 is not a Fibonacci ratio, but it's like a psychology level, right? When like the 50% rate. So as you can see, during the downtrend, the price going up in the short term, and we can measure the potential resistance. For example, you see when the price is create a trough and going up, we don't know where to find out the resistance level. See, because without Fibonacci, we don't know how to draw a trend line. We cannot see it. For example, like if we draw a trend line, we can estimate right here, but there are some short-term resistance levels somewhere right here we don't know, right? So how to do it? We draw Fibonacci retracement right here. You see, at the ratio of 0.382, about $21,000 per share. See, the stock has created a peak. So this is the resistance level. The stock, the rise is near 23.2 and it goes down again. And the part here, 0.236, is a supporting level, right? The resistance level is breakout and turn into supporting level. And if the price continue to rise, we can, based on the Fibonacci ratios, to measure the potential resistance. Usually the strong resistance falling into the 0.382 and 0.618. So we can set the target. If you buy, if you put an entry in, you can set a target in the 0.382 or 0.618. We can skip the 0.86 or 0.5. We can focus on the golden ratios. The golden ratios are the strongest support and resistance level, right? So for example, price breakout from here, it retrace back. We can buy this somewhere in here. So the next target could be about 25.5, which is the 0.618. During an uptrend, let's say, this FD stock, this one still has uptrend. No, not so good. Here. For example, an uptrend, you can pick a trough, right? For an uptrend to draw a retracement in an uptrend, we draw the peak first. We draw the trough first, then we choose the peak. We can choose any one right here. You can choose this, and we connect together. See, there's a retracement. Each ratio will act as the supporting level, and you can put an entry point, right? See, the strongest level is 0.618 and 0.832. The price usually they skip the middle ratios. We can use this trough as a Fibonacci. See, the price still reflect at 0.5 and 0.382. Usually the trend remains strong when the retracement stop at 0.5. So if you draw a trend line right here, this is a weak trend, right? From here to here, you see it's the breakdown from the 50%, which means it is falling 50% from the peak. Usually a strong uptrend needs to remain from 50 to 0.382. If it's falling down here, then the uptrend is getting weaker. And it would take time for the stock price to have moving sideways and going up again. You can draw it right here for the stronger trend. See, they're still reflected at the Fibonacci ratios. See, supporting turning into resistance, right? The longer the trend, the stronger the support and the resistance. So you're going to want to identify a strong support and resistance. Try to draw it at a big time frame, big period trend. So for example, for RE, you see there's a resistance in the price bouncing back at 0.382, and there's a resistance in 0.236. So when can we enter the trade? Well, we buy near the supporting level, which means somewhere like here is about 70 to 72, 73, or when it break out of the resistance, and the resistance will become the supporting. So two options: falling back to 72 or break out of 82. Break out of the 82 resistance and they retest the 82. Right? The retracement is to measure the potential supporting when the price is falling in the short term. Well, in a still an uptrend, we measure the small downtrend, and in the big downtrend, we measure the small uptrend. Right now, the market is in downtrend, so if you use the Fibonacci retracement, we use it to identify the small uptrend. For example, we use this. Let's start with the highest peak, and you see there's a resistance in 0.386. If you lower out this bit, you see there's still a resistance. So choose any peak and trough, but the longer, the better. All right, so right now, they are near the resistance level, right? Price is, so you buy right here is still risky, right? Right when we draw a trend line, in the first session, I draw a trend line, see? It is near the resistance level of a trend line. even in a big trend line, it's still near the resistance, right? So if you buy around here, it's too risky. Even maybe fundamentally a good stock, but if the near resistance level, it's not a good deal to trade. The risk and reward are not attractive, right? So when they put a trade, buy near resistance, like falling back to this place, back to the nearest trough is about 19, or you can draw a trend line, go back here and start to buy. Or in this case, wait. This case, see the price is going. Now, if we draw it, you see this is nearly, is it breakout of the trend line, right? So there's some noise, some signal, right? Some false signal. You know, if you connect the peak of June, the price is in the resistance level, but we draw in here, the price seems to break out, right? So how do we deal with that? It break out, it has to be retest again, right? If the price retests the 24 level, the supporting level, if they retest it successfully, then the price will tend to continue to have the short-term uptrend will continue to rise. If the price falling back, then it will become a resistance. Right. So if you draw two ways and you see there's some controversial signals between the two, we can wait for the retest. Or in this case, the bigger the trend, the more reliable it is. Right? The bigger the trend, the stronger the support, the resistance are, the more reliable they are. So if you use the big trend, you see is the resistance level. We can wait for it will go, whether they can go up again to 25, or wait for they completely break out from the big resistance level and the retesting that. So cross over 25 and retest again the 25 mark. And we can start to buy. So far, this is a sell signal. Okay, so that's a retracement. How about Fibonacci extension? Extension is with we measure the current trend, right? So like in the downtrend, we measure the bigger target, right? So for example, if the price creates a peak right here, which means the retracement has ended and the price will continue to the big main trend. So like in the downtrend, the price has a small increase and then they create a peak and they go down again. So we can measure where can they go. We use the retracement to measure the continuous trend, right? So we use the golden ratio. For example, if the price create a peak right here, we can measure the potential place can go is 0.382. We can go back in here or in here, or 1.618. Further is going to go down to 9. Wow. Right? For clearer signs, for example, here, right? Start here. To draw a Fibonacci extension, we need 3 points. For the downtrend, we need 2 peaks and 1 trough, right? Start with here, measure in here, and we can measure the next one's lower highs in here. You see there's extension where the big trend could go, right? For the downtrend, we measure the potential supporting level of the price. For an uptrend, we use the extension to measure the resistance. It's opposite to each other. Like for example, in here, we should draw a retracement to identify where the trend can go. We can also use this retracement to measure the resistance where the price can have a small uptrend again. You see, as you can use this to draw the extension when, for example, in the early 2022, when we identify two peaks getting lower and a trough, we can draw the Fibonacci extensions to measure the potential support and resistance in the main downtrend. See the price, they reflect at the specific Fibonacci ratios. So that's how we use to identify support and resistance if we don't use a trend line. Okay, here's some example from the past for Vietnamese stock for DXG. Right, some nature. They connect the peak and trough to create the Fibonacci. They create support and resistance. Oh, 50% and 61.8. Right, I forgot. 50% is also the important in the ratio. So the three important ratios, 61.8, 0.618, 0.382, and 0.5. That's the three important levels of Fibonacci. For the Fibonacci extensions, for the Fibonacci extension, the important ratio is 100 to 150%. For example, like let's go to Vietnam, go to the chart. Right, the milk. Okay, oh, Vietnam has a big downtrend since 2018, and then they. All right, for example. All right, let's start with downtrend of Vietnam. So 3 important, 0.382. See, the price reflected is the most, 0.5 and 0.618. From the Fibonacci extension, we start with 2 peaks and 1 trough, second peak right here. The important ratio is 1.5, 1 to 150%. So if the price falling, here's the potential. Vietnam right now has created a reversal. Seems it has created a reversal, so we can use this to measure the uptrend. Right? Start measuring uptrend with this one, a peak and a trough. So in extension, the important ratio are 100% to 150. 150 is somewhere between here. So in on the website, when the price crosses above 100%, the measure will be 1 to 1.618. 1.618 is 6.8 here is also a golden ratio, so it's also counted as an important resistance level. So for example, Vietnam has what it seems like going back into an uptrend again. Let me see if let's draw some trend lines, see whether they break out already. You see the trend line here. Well, they're not yet to break, but the smaller ones. Try here. Well, yes, Vietnam has break out a trend line, so they are reversal. So if you use the Fibonacci, the potential target is around 82.5, which Fibonacci 100%. or 115% is about 88 or 93. See, it's pretty close to the resistance level of trend line. So you can use either way you like. You know, if you see it's hard to draw a trend line, you know how to draw it here or here. You can use the Fibonacci, connecting the peak and the trough together. From Vietnamese right here, you can also draw a trend line. Right, you see there's trading channel. There's a small resistance here. So the short-term selling part. And this could be also a supporting level. Now, with price going up here, they will have some adjustment, retracement back here. And if it successfully tested the new supporting area, this will become the entry point for Vinamilk. You can buy here. All right. Okay, finally, technical indicators. The first four parts, trend, support, resistance, trend line, and Fibonacci, we have to draw it. So it is a bit subjective, you know, put on our point of view. However, technical indicators are automatically calculated. So using technical is easier to identify the trend. However, indicators are usually lagging, which means the signal is created maybe a bit late if we use the trend. If we draw trend line, Fibonacci, we call it price action. Wherever you analyze basically on price in volume, the price action, you can figure out the signals early, but early signal could be false signal. And technical indicators could generate the signal a bit late, but it will be more reliable. So in this part, I will show you the four most popular indicator. They are the moving average, the MACD, RSI, and stochastic oscillator. Right, first is the moving average. Let me show you the chart for practical. Right. First, the moving average. Moving average is calculated by is an average price for over a period. For example, if we use the 20-day moving average, each point in this line are the average price in 20 days, right? So if, the 50-day moving average is the average price of stock price in 50 days. So the signal is generated is when the price is above the moving average. Usually the price are in uptrend, or the moving average itself are rising up. You still consider it as an uptrend. When the price is below moving average, it is the downtrend. The moving average itself can use to consider the short-term, long-term, and the middle-term trend. Like what I'm using here is a 20 days moving average. It's a short-term trend. 20 days moving average represents the trend in a month. Like 20 days, like 20 working days in a month. We are subtracting some weekends, holidays, usually a working day, but 20. Some investor will use the 21 or 22 moving average. For the middle term, usually for 3 months, quarter, we use the 50 days or 60-day moving average. So the 50 days is more popular. For long term, 6 months to a year, we use the 100-day moving average or 200 days. 200 days mean the average price in a year. 200 working days, 100 days in 6 months, 50 days a quarter, and 20 days are usually 1 month. So the signal of it is when the price is above the moving average. So that is a good sign. You know, above average is good, below average is bad. So when the stock is above the moving average, it's a sign that it is going into an uptrend. And when it's fall below the moving average, that's a signal that's going to a downtrend. So when we can buy, we buy when the stock are above the moving average. Now, so I have read through your schedule competition. Your competition lasts begin from tomorrow, right? November 1st, and ended in December 15, which means you guys only have more than 1 month to trade. 1 month is a short term, so you can use short-term moving average, right? For example, 20 days or even 10 days or 5. But I recommend using the 20 days because, you know, below 20s, there are a lot of false signal, right? So when we buy when the stock is above the moving average, and we sell it when it's below the moving average. Or because in a short term, if you wait for the stock to cross below the moving average, there would be some lagging signal, right? As I say in the beginning, the indicators are more reliable, but they are lagging. So when you realize the trend reverse, maybe you're a bit late. So when you can enter the trade when price is above the moving average, and we can sell when you see the price go too far from the moving average itself. You see, right? The price going up and it will retrace back to the moving average. For short term, here's for another trade going up again, and it's going back to the moving average. Usually, you can use, you see, 6 to 8% if they are for blue chip stock, right? In VM30, because blue chip stock, the volatility are very small. So you can use a range of from 5 to 10%. So you see if they are over 5% from the moving average, right? They go far away from 5%. Usually you can use to 6, 7, 8, or 10. We can take profit. We don't have to wait until it go crossing back in for short term, because maybe you for 1 month trading, for example, like you trade in, right? For example, you put in trade here, and you wait the stock, the price to cross below it to give the falling signal. Well, you will miss the opportunity of 3% of profit. So you can buy when the price above, and you can sell it when you're feeling that it go 6% off. You can use the candlestick signals here for some extra sharings. You can use the candlestick to identify the potential peak and trough, right? So you see each candles represent the four type of prices: the opening, closing, the highest, and the lowest. The green candle represent the green candles mean that the closing price are higher than the opening price, which means they are rising in that day. You see the long sticks above and under the candles, we call it the shadows. The shadows represent the highest price and the lowest price in one day. So if you use a stock and you see that the stock has a small body, right? Small body shows that there's a fighting between the buyer and the sellers, strong buy and strong sales. No one's dominated, and if no one dominated, usually the price can hardly rise. So can play stop it. It could be continue rising here, but as short-term trading, we can stop it here. For example, you see the price, this what the fighting between the buyer and seller. The price continue to rise, but we can take a stop at this moment. You can see the candlestick, we can stop it here. You know, we cannot sell it. We can hardly sell the pigs. I remember most of all of my big return after I sell the stock, they would continue to have a 10-20% increase more. Right, so see that you don't worry if you sell the stock and the stock continue to rise. But the point is, we take profit. We got profit. We meet our expectation with the return. We get out of the trade, right? Okay, right, image shows the trend direction, popular period. What's some popular period of moving average for short term, 5, 10, 20 days, but I recommend using 20 days moving average. And you combine with the candlestick signals. For midterm, you got 50, 60, 75. For long term, 100, 200 days, and 250 days. The most popular in the periods are the 20, 50, 100, and 200 days. Oh, you guys can use the mid and long term moving average as filter. Like, for example, right. For example, we add up 50 days and 100-day moving average as a filter. Right. Usually, it's better to buy a stock when it's in a long-term uptrend, right? So you can use the 100-day and 50-day as a filter. You see, the stock may cross above the moving average, the 20-day, but they're still below the 50-day and the 100-day, which means they're still in the downtrend. So it's risky if you put a trade here. In this moment, this is a good trade. However, the price falling down, we take a stop loss. Now, the key part of technical indicator is that it shows us when to get in, when to get out of trade. It helps us to fix our falls quickly. You know, if we make a mistake, we can fix it quickly, right? For example, if I enter the trade here, price is above the 100-day, 50 days, and 20-day moving average. So I expect it could be continue to rise again. However, the price cross below the moving average and give a sell signal. That's the moment I know that, okay, my expectation is wrong. You have to stop loss, get out of it with we stop loss right 4%. If we get out, we only lose 4%. Right? Remember the key point in trading with technical analysis that we have to place stop loss. If we don't place a stop loss, it will, well, we can hardly break even, get a break even return again. Right? If you buy here and you don't want to sell it because you think, oh, it's a good stock, I don't want to sell it, and it could go to loss, 24% loss, right? One thing you guys should remember is that the buying and selling points, you have be on the same method. You buy a stock with fundamental, you sell a stock with your fundamental point of view. You use technical method to buy a stock, and we to buy it when the technical say it's time to sell. Right? You buy stock with technical and you sell it when the technical say it's time to sell. Right? There must be the buy and sell must stand on the same page. We don't buy it based on fundamental and we sell on technical, or we buy on technical and we hold it because we have good fundamental. But when the technical says sell it, we don't sell it, we can hit the loss of, we can have more losses, right? So in general, if you use the moving average, you see Vinamilk right now has in uptrend, right? The price is above the short-term moving average, middle term and long term, all the short, middle, and long moving average. The price crosses over them all, which means they are having an uptrend. And the moving average itself can act as the supporting and resistant level. See, during the downtrend, the moving average acts as resistant. You see, the price usually falling back again when it hits the moving average. And when the price crosses over the moving average, resistance become support, right? We're bouncing back again here, right here. See, there's a resistance level. So when we can buy Vinamilk, we can wait for the breakout. They're not yet breakout, it could be fall back again. We can wait for the breakout and a retest at 77.5. In case the price doesn't break out and is falling back again, we can wait for the signal for the potential supporting level at 75 near the 50-day moving average and 20-day moving average, right? 47, 74, 75. I prefer using the moving average as to identify support and resistance rather than use it as a buy signal, right? You see, when even it's crossed, when the price cross over, it's not yet moving straight up. There will be time to retest it, right? Retest the supporting level. So we can wait for the retest. Maybe if you miss the signal, on theory, when the price cross above the moving average is the buying signal. But if we miss this one, we can wait when the price retrace back again as a buy signal, right? Buy near the supporting level when it's near the moving average and buy. And if when it goes too far, we can sell. Or during the downtrend, if the price go too far for the moving average, we can still put a trade, right? And falling too far, 10%, we can buy and we can sell it when it's go near the moving average. For example, for back to the banking, let's put some banks. Oh no, that's okay. BIDV, right? For example. You know, for short-term trading, because your competition lasts in a month. So if you want to have a high return in short term, you should look for stock with high volatility. And you can look for the stock in finance or commodity stock because the volatility is very high. You know, during a downtrend and in a small retracement, they could have a small uptrend up to 10, 15, 20% rising. So if you buy that in a downtrend, you wait for the small uptrend and you get in trade, you can have about 10, 12, 15% return. Right? For example, for BIDV, see the price go far from resistance level. See, the volatility is higher than Vinamilk, 10%, 14. 40-50% far from the moving average, right? When the price are moving far away from the moving average, they are tends to going back, right? So you can buy in here, you see here, and you can wait for the second trough like here. You buy and you sell here. Short-term trading, right? For more safety, you can wait it going cross above the middle moving average, so we confirm a midterm uptrend. Here's another example, right? The price goes far from the moving average and bouncing back. So right now, the 50-day and 200 days are resistance level of BID, right? So it's sell signal. So when to buy back again, we have to wait. It goes back near the supporting area, be the latest peak, 23, or the moving average, 20-day moving average, or 22. So 22, 23 is the entry point. And for another high volatility stock is fertilizer stocks. Right, you see very high volatility. They are commodities. See the price go too far from the moving average. Buy. We cannot buy right here. Right? The first two is for the benchmark. We can start and trade here. Or usually we can skip this. We can skip this part and can draw a Fibonacci retracement to measure the potential trough somewhere in here from here, right? We buy and we hit a stop loss when it hit the 50-day moving average. So far, the price is above the 20-day moving average, similar to this place and this place. So the 20 days act as the supporting level, right? Around 31 to 32. So the price moving from here, moving down here, we can place, we can put an entry, put a buy order, and we sell it when it is near the resistance level at the 50-day moving average. All right. All right, for revision. All right, above moving average is a positive trend. The price crossover is positive. We can use the signal between the price and the moving average. And we can also use the crossover signal between the short moving average and a long moving average. For example, if you see the 50-day moving average crosses above the 50-day moving average, well, that is a positive signal, and we can buy. And in the opposite, if the 20-day crosses below the 50-day, that's a sell signal. The note here, the shorter the MA, the faster it is, but it's less accurate. That's the reason why I recommend using the 20 days moving average for short term rather than the 5 or 10 days, because 5 and 10 days give the faster signal, but they are less accurate. So 20 days, using 20 days, you buy when the price are near the 20-day moving average, and you sell when you feel that it will go far from the 20-day moving average. Here's for example of the Kien index and the 20 days. Remember, during the sideways period, moving average are not effective. It gives false signal, or the reversal signal are too late. So when you using moving average, we have to combine with the trend line or identify the trend. Right? So if you see the price crosses above the moving average, and you see that they are creating a higher high and higher lows, right? Crossover moving average, and the peaks and troughs are getting higher, so you can draw a trend line. Well, that is more accurate signals. Right, so here's a combination of the 5-day and 20-day moving average. Or you can use the short and long moving average together to create a signal. All right, next one is the MACD. MACD is a shortly written for moving average, conversion, and diversion. Right, the MACD is combined of two lines. The MACD line you see is the blue one, and the signal line is the red one, the red line. There's a zero line between, and between the zero line, you see there's a bar chart, red and green. This is called the MACD histogram. MACD histogram is the subtraction between MACD and the signal line, right? MACD minus signal line equal MACD histogram. The green histogram means that the MACD is above the signal line, which shows that the stock are in uptrend. And if the histogram is red, the MACD is below the signal line, is the downtrend. You know, it's similar to using the moving average, like price above moving average, uptrend going down, below the moving average is the downtrend. So MACD is similar. MACD above signal line can act as the moving average. See, it's the moving average of 9 periods. EMA stands for exponential. Moving average are three types. Simple moving average is the one that I have already showed you. Exponential moving average. Exponential is the EMA. Exponentials mean the prices in the nearer periods has more weighted in the formula. So they add some like a proportion to calculate the average price. And the third one is the smooth moving average. We focus on the first two, simple moving average and the EMA. They are more popular. And the EMA is only used to calculate the MACD. MACD line is the subtraction between the 12-day EMA and the 26-day EMA. I already draw. See the purple line is the 12-day EMA. 26 line is the green line. There's a 26-day EMA. Why 12, 26? The man who invented this indicator, and after many testing, he found out that the 12 and the 26-day given the best signal. So that's you use that as a standard number for MACD. So here's a signal. Well, MACD crosses. You can use signal. You can use the MACD line and the signal line signal, and the MACD and the zero line, right? So if the MACD crosses over the signal line, that is a positive signal for an uptrend, and the MACD crosses over the zero line, that's a strong uptrend. For example, let's look at a stock with a strong uptrend, FPT. Now, if you use MACD, you can use for the one with have a less volatility. The stock with has have less volatility. We can use the MACD if we show better signal, like as MACD here. Oh, where is it? Oh, I already got it. All right. Okay. All right. We start from the 2020 to 21 period, right? The MACD work best in the uptrend, right? So see when the price above the zero line, you see there's a zero line here. There's a strong uptrend, and when the price and the MACD line and the signal line, they create a smaller buy and sell signal. Now, in my first scientific journal about technical analysis, I do a test about the MACD indicator, and it shows that I do the back test on the VN index, and the result shows that the MACD and the zero line work best in the Vietnamese market. As you see, the MACD and the signal lines are very bumpy. Now the signal could be false signal. Let's look for VN index. You see the VN index itself. Maybe in other market, the moving average can work best. For example, if you look at let's try the Dow Jones. See. Let's look at the other markets like Dow Jones. See the right chart. All right, see, like here's the Dow Jones. Oh no, this is the dollar index. Start with Dow Jones. It's DJY. Right, Dow Jones. You see the MACD signal between MACD and the signal lines work very well in American market. See, put a trade here, you can sell signal in here. Well, we still have a trade. We can still have a profit. This is the downtrend, and we can still make profit using MACD and signal line. However, in the Vietnamese market, the MACD and the zero lines give a better signal, and we can only use this in strong uptrend. But in short term, MACD can use as a filter for reversal signal. You see the word CD stands for moving average, conversion and diversion. We use conversion and diversion to figure out the reversal signals from falling to rising. So what's mean conversion and diversion mean? Diversion is when the price are getting higher highs, higher low, and moving average, they create opposite. They have lower low. For example, for VN index, see from 2020, all right, 2021, the peaks are getting higher. However, if we look at the MACD, they are getting lower since June 2021. This is the warning signal that the uptrends are getting weaker. Like a conversion diversion is a signal shows that the trends are getting weaker. The diversion happened in an uptrend. See an uptrend and see a divergence. See the direction they move separately from each other, right? Going down here. So the reversal signal, so when the price break out of the trend line, so trend line of an index in here, right? When the price break out, combined with the diversion signals, it shows combined with the diversion signal on MACD, and it gives the reversing signal from rising to falling parts. So in the downtrend, the MACD will give conversion signal. Conversion is when the price, the stock price are getting lower, and the moving average are getting higher. So you can recognize the retracement. For example, like here, you see, they're getting lower low and lower highs. Meanwhile, the moving average, this part, creates a conversion when, see, the trough are getting higher. This one, the trough are getting lower. Or you can see the peak. Yes, you can see a downtrend line here. Uptrend conversion, they heading into 1 point. This is a conversion sign. So if you look at right here, you see there's a conversion sign of MACD, which means the stock can reverse from downtrend to a short-term uptrend. See, they are having higher highs, and this is lower high, right? The trough are getting lower, and meanwhile this part is getting higher. But this is a conversion that the price might turning into a small uptrend, right? So when you see that, you can scan a stock will have a conversion and diversion signal. In this case, look for conversion signal. For example, let's looking for any banking for conversion signal. Well, these don't have conversion signal, but you see there's a rising signal in MACD, right? MACD above the signal line shows that it's in rising. We can combine with the moving average, right? Positive, see 100. Well, this is still negative, and this one was still negative, right? So the price is near the resistance level, so it's not a good place to trade, but we can wait for it moving backward to 23, 24. And MACD is still giving us the rising signal. Earlier today, I found out stock in the securities industry like HCM. Oh, like this. You see, there's a small conversion. See the price and the peaks are getting lower, but the trough on MACD is getting higher. So this is an example for conversion. Like in this case, in June 2022, in the big downtrend, this is a conversion of MACD and the stock price, right? So this is a signal. So when you look for the signal, we look when the moving average crosses over the signal line, MACD cross above the signal lines, we can wait for the second cross. The first crossover is usually not working, right? We can wait for the conversion. Then we wait for the second one. See, and the trend R tends to last longer. Another option is VCI. Let's only see 2 stocks. See, another conversion. This one also have a small conversion here. See, lower low, higher low, they converge. So that's how we use the MACD during this period, right? We don't use the trend. We use the conversion signal to identify the reversal, the potential reversal signal. Right, example. Okay. Okay, next is the RSI, Relative Strength Index. The RSI is used to identify the potential peak and trough of a stock. You see, the range moving from 30 to 70. So whenever the price is above 70, it's a time that it's about to create peak. And when the price is below 30, it's a signal that it might create a trough, right? During an uptrend, they have different uses in different trend, right? During an uptrend, when the price is above 70s, which means they are overbought. Overbought in an uptrend means a strong buy. And that is how we have to enter the trade. And on the opposite, when they're in the downtrend, the RSI in the oversold levels mean they are strong sell. In the sideways trend, when the peak and trough they moving horizontally, they didn't create any higher high, higher low, or any lower low, lower high. They have the same range. Then the overbought, oversold will act as the signal to identify potential peak and trough. Right here, for example, you see overbought here, the peak, overbought here, or peak. When the price is crossed over this, the going uptrend, see the price is in the overbought level. Because in uptrend, they keep create higher low. This signal is represented as the strong buy. And we don't sell it, we will hold it. We'll sell it when the price crosses below the 70 ratio. When it crosses below 70, it will give a sign that the peak has been created and the trend has ended, like here. So reversal oversold is when the price is in creating a trough. RSI also used as the supporting, also used as, you see, conversion diversion. And also can act as supporting level along with the stop, like this. Add in the RSI. Sorry. All right. You see, there's a conversion diversion signal of RSI too. So both indicators give a conversion signal. Well, it's very reliable, right? So you see the price overbought, the signal that the RSI overbought the signal is the sign for the price are about to create a peak, right? It gives signal early 1 month earlier. You see this in the diversion, right? It's getting lower. This one is the same. So if you see the divergent signal and the price below the moving average, is a strong sell, right? Usually, when we see the price here, some investor we expect that the price can bounce back again, but to filter it whether it can moving up, moving crosses over the moving average again, we can look at the RSI sign. You see it RSI creating a lower high, and there's a sell signal in here. Then the price will tend to continue to fall. Right, so like here the example, you see there's a diversion here. Actually, no, actually they're moving the same page. They're supporting the downtrend. See any diversion? You can look at the weekly chart. Right, weekly chart diversion. You see the diversion in here. The stock create higher heights, but the RSI has a lower height. So that's a warning signal. We can still enter the trade in here, but if we see any sell signal on the daily chart, we can quickly sell. Right. Okay, the use of both indicator. Right now, RSI and MACD, you can use the conversion and diversion to identify reversal signal. Right, next one is stochastic oscillator. The usage of stochastic is the same as RSI. They are called momentum indicator. Now they measure the volatility, the potential peak and trough. So this oscillator also based on the overbought and oversold signal like RSI. Right? During a sideways trend, overbought, oversold represent the potential peak and trough. And in uptrend or a downtrend, overbought represent a strong uptrend and oversold represent a strong downtrend. So when you use indicator, you have to look at the price also. Look at the price, whether they create any higher high, higher lows, or lower low, lower highs, or they moving horizontally. Okay, for example, the stochastic itself also have the conversion and diversion. Yeah, we can use either one of three. Right? Let's put some stochastic. I can't. The standard statistic is 1433. Okay, see, it's smooth. Okay, so the green line, it is familiar to MAC. See, the blue line is stochastic and the red line is the signal. When the blue line above the signal line, that is the buy signal. It's similar to MACD. So there are two ways to use stochastic using overbought, oversold, or we can use the stochastic line with the signal line. But I prefer using three as a reversal and conversion sign. You see, this is lower low, and the low here is getting higher. See, this one getting higher. That's a conversion. See, back in the past, any diversion signal. The diversion signal in uptrend, no. Right, there's another diversion signal. See, the peaks are getting lower. Right, lower, this one getting higher, diversion. The diversion on the weekly chart, I say the bigger the trend, the more reliable the signal are. So if you see a signal on the weekly chart, it will be stronger than the signal on the daily chart. You see here, this is overbought, right? Oh, you can see the price is overbought and the price hasn't break out from the nearest trough yet. You know, the trough is here the same. The lows are at the same level, and this one is overbought. So that could be a potential trough, and the price maybe bounce back again. All right, let's go. Let's continue. Right, so we are finished with the indicator. Indicator will give us the buy and sell signal. However, we cannot predict the potential target by using the indicator alone. Well, we can use that for moving average. We can identify target by using the moving average as the supporting and resistance level. However, the other indicator like MACD, stochastic, RSI, it gives us a signal, but we just know the signal. We can hardly imagine the price where it can go. So to measure the price target, we use the chart pattern. You know, like in fundamental, we use the financial model and Excel, you know, using some discounted cash flow to create a financial model to evaluate a stop. In technical, we use the chart pattern to identify the target. So there are two types of patterns, reversal patterns and continuation patterns. Reversal pattern is we use this to identify when the price has stopped falling and begin to rising again. Continuation is mean, well, the price will continue its current trend. When it's falling down, there's a continuation pattern. It will keep falling. Right, some features. There must be an existence of the previous trend, and the signal for the pattern is the breakout, right? See, also the same, the larger, the stronger, the more reliable. Usually the pattern usually lasts for 3 months, 6 months. Some pattern may need 1-2 years to create it, right? The pattern at the peaks are usually shorter life than the trough. Like when it may took about 1 or 2 months to create a pattern for the peak, a reversal pattern from uptrend to downtrend. But from downtrend to uptrend again, it took a longer time for the stock to rise. Like we in my companies, and we usually call it we going upstairs using we're going up using the stairs and going down using the elevator. Right, when the price falling down, the speed will faster when it's going up, and it took shorter time to create a reversal pattern from uptrend to downtrend. And volume is usually more important. I will speak about the volume at the end of the session, right? So for reversal pattern, here are some popular we can see in the business market. First is the head and shoulder. You see 3 peaks. What you see is similar when we identify a downtrend. You see the price after creating higher heights, it stopped getting higher, and the peaks are instead getting lower. So if you see this picture, is called the head and shoulder. The pattern is created when the price crosses below the trough. We call it the neckline. For example, VN index also have see. That's not very clear. Let's get some head and shoulder clearer. Sorry. Oh wait, so what? In 2018, head and shoulder usually happen by the start, right? 2018. Let's put out the daily charts. 22, now let's clear out 23, 22, 18. Right. But this one's not exactly head and shoulder. Now, what I see clearly from the VN index. VN index in 2018 has a head and shoulder before they fall down. This part also considers a head and shoulder. You see, there's a head and shoulder. However, this part, they deny that, but they're falling back again. See, it is not the head and shoulder. They did create head and shoulder, but then they go back again, and they're still breaking the neckline. See, the price stop getting higher. They create a sideways trend and they break down. Let's just see the clearer head and shoulder. Right, head and shoulder. This one. You see, there's a peak. It's not look exactly like in the book, but you see there's the peak stop getting higher. See it bounce back again. Here it create another peak. So see 1, 2, 3. So it's called head and shoulder. right? Falling back, retesting the resistance, get over it for signal going back again. This head and shoulder. Right, here's the VN index chart, head and shoulder, right, from 2008 to 2012. During that period, a lot of head and shoulder pattern happens in VN index. What you need to see is just during uptrend, you see the price stop creating higher peak and returning from the big downtrend, then they bounce back again, but they create a lower one. If you draw a trend line, you see it's breakout. For example, like this is breakout from the trend line. This is the reversal head and shoulder. This is when the price create a trough and reverse from downtrend to uptrend. Like you see, the price are getting lower, but after it stopped getting lower, instead it's getting higher instead. So this is a reversal pattern. And it break out from the neckline. The neckline can be straight or diagonally. It depends, right? Just what we need to draw, how to draw a neckline, we draw the resistance level together in the downtrend, and for the uptrend, we draw the line between the trough, right, to represent the supporting level. Okay, the second one. This one is very popular right now, the double bottom pattern. You see when the price stop creating lower low, the peaks are equal to the previous one and they're going back again. So that is the double bottom pattern. That's a reversal pattern. Right now, there's a lot of charts, not a lot, a few charts that has the double bottom. Let me see. VN index itself also create a double bottom right here. This one is considered another double bottom. The double bottom can still have a lower low, but if they are a conversion sign, we can still count as a double bottom. Here's another double bottom, even triple bottom, right? The key point is you see the price stop getting lower, start going sideways. That's a sign for reversal. See, during this stage, security start. Yeah. Let's go back to the page. Right. See, this one is a double bottom pattern. Just create a reversal, a small reversal. To draw the target of a pattern, we use the symmetric method, which means the price usually for a perfect condition, the target must be equal to the previous range, right? So, for example, if the price moves up here, the potential target is around 32. That potential, but well, unluckily, the price going down, so it hit a stop loss, right? So we see that could create a double bottom pattern. We can put in a trade and take profit at this point. If the price going down, we stop loss. Back in the past, let's go. PHR did has the this one we can see it clearer. You see, there is a double bottom pattern of PHR, Phước Hòa robbery. See, here's an entry point, and let's see the measure. I remember I invested in it in 2022. Right, the target, see, is nearly here. Right, the price going here and then it go bounce down again. So we can use, we call the symmetry method. The target range equal to the previous range. We can use that in the trading channel also. If the price is breaking like this. Like for example, for CTG, we can do the measure for the big trend, right? For example, if the price, see, control trend like here. If the price crosses over this trend, this trading channel, for example, it may not right here, if we have to bounce back here and break it out somewhere in the middle of 2023. But if they break out, we can use the symmetry method to measure the target, right? So if it break out at 24, we can measure the target to 32. All right, here's another common feature. This is the continuation pattern, which means when you see this pattern, the stock price are continue to its current trend. Right now, we don't have, we don't look for the continuation pattern because, well, they're in a downtrend. What we need to scanning for is the we need to scan for the reversal pattern using for the double bottom. So this is for just reading, you know, if you can save it back. So when the market is in a strong uptrend, you can look for this pattern. Cup handle is used for continuation in uptrend. It's not working right now. You guys can remember the double top and the reverse head and shoulder to give the signal combined with the conversion and diversion of MACD or RSI stochastic to recognize the reversal sign. And finally is the volume. Right, the role of volume is measured as liquidity. So here's some keywords to remember when you use the volume. So if you measure a stock price, if the price is increasing and the volume is increasing, which means the market is strong uptrend. And if you see the price is increasing, but the volume are decreasing. Now, price getting higher, but the volume are low, is one signal that the trend is not stable. The increase in volume strengthen the trend, and the decrease in volume is a signal that the trend may about to end. So that's the in the downtrend. During the downtrend, the price falling with large volume, which means there's a strong selling force, which means a strong downtrend. And during the downtrend, you see the volumes are very low. It's a warning signal that the price may be reversed. Right? Here's a correlation. Volume increase, strong trend. Volume decrease. The trend is not confirmed. We need to analyze other factors. Here's, for example, you see for the VN index, the strong increase have to go with the strong increasing in volume. Right? For FPT stocks, volume spike. Here's the volume spike. When the volume spike are the signal of potential peak and trough. During the rising price, you see there's a large volume during the day. That's a signal for a potential peak. When it's falling, during the falling and with a very large increase in volume, that's the signal for the potential trough. And you can use the volume spike to identify the breakout. When the price break out from resistance with a large volume, which means there's a strong buying force and the price may continue to rise again. Right, is a note, right? Increase in volume after a period is a peak the downtrend, like I said earlier. All right, to summarize this session, there are 5 steps to analyze the stock on index, right? First, we need to identify a trend based on using the peak and trough, if the trough, whether they have higher high, higher lows, or you can draw a trend line, trading channel. And step 2, decide what phase of the trend are the price in. They are in earlier uptrend or in the middle of uptrend or at the end of an uptrend. You know, if you see the stock in an uptrend, but there is some signal like divergence or the volumes are getting lower, which means that the uptrend is about to end. Okay, step 3, after identify this trend, we identify the nearest support and resistance based on Fibonacci or the previous peak and trough or moving average indicator. And step 4, we check out the signals of indicators and we make decision to buy or sell the stock. So, well, here's the end of the training. Good luck for your competition tomorrow. And thank you for listening.
Okay. So that is the end of Mr. Kien perspective, and I would like to thank Mr. Kien for the impressive lessons about trading sessions 1. And if you guys have any questions regarding this part above, so please leave a comment down below. Mr. Kien will respond you as soon as possible. And now move on to the Q&A sessions. You can turn on your microphone to ask the questions or type on the chat box, and we will collect it and answer as soon as possible. Feel free to write down your questions in both Vietnamese and English. So don't be shy to comment the questions. So let me open the chat box. Okay. Oh, take a look at the first questions. I received the first questions from Kien Phan. And the questions is how many percentage is this Fibonacci will be correct? So Mr. Kien, can you help me answer these questions?
And the percentage of the accuracy of the Fibonacci, right?
Yeah, that's right.
All right. So the 3 important ratio, the 0.5, 0.382, and 0.618, the accuracy is, I guess, about 60 to 70%, correct. And you know, the longer the trend we analyze, the more reliable and the more accurate it is. If you analyze using the Fibonacci, but you use in the 2 short time frame, if you analyze a price in 1 month or 3 months, then the probability might be vary about below 50%. So if you analyze in a longer term, 6 months to a year, to identify the support resistance level, the probability might be higher.
Oh, great. Thank you, Mr. Kien. And I hope Ying Fang will satisfy with Mr. King's answers. So let me check the next questions. Oh, and the next questions is, how can we know what pick to use? That question is come from Trần Phi Long.
The pick to use to identify resistance level. We use the nearest one. Like the market right now, the nearest peak is in the early of October. So that is the first benchmark to identify the resistance level. When the price crosses above that peak, we will use the peak from the further past, right? So the basic idea is just based on the nearest peak and the nearest trough to identify the support and resistance level.
Oh, great. And Long, I hope this answer will help you know more about the pick. And thank you, Long, for the questions, and thank you, Mr. Kien, to answer these questions. And let me check the comment. The first questions is come from Bảo. Which method is more suitable for short-term investment like IIC?
Oh, right. I did say during the training, because the competition lasts for a month, so it's quite short. So we have to use short-term indicator. So specifically, we can use the 20 days moving average to identify the signal. And we can use the MACD or RSIs, but we don't use that to find out the buy and sell signal because, well, indicator may lagging. We use MACD, RSI, or stochastic to looking for the conversion and the diversion sign. The signal that shows that the price may reverse from downtrend to uptrend. Right. So basically, we use MACD or RSI to identify reversal signal, and we use the 20-day moving average to confirming the short-term uptrend and the buy signal. We buy when the price near the moving average or near the latest trough, and we sell it when the price go far from the moving average, maybe 10 or 15% away from the 20-day moving average. We can take profits. That is one of the ideas.
Oh, thank you, Mr. Kien. And so let me see if there are any other questions. Oh, another questions come from Ngọc Huyền. So how many triangles in the symmetrical triangles do we need to create the breakdown point?
How many triangles? The triangle patterns only need one triangle. Usually the triangle, you see the triangle that lasts for 3 months. The price will go, they're moving sideways, and the range are getting smaller to smaller. Well, that's a great triangle. Usually it lasts for 1 to 2 months to create, and you see the breakout from the triangle. That is the entry point.
Thank you, Ngọc Huyền, for the questions, and thank you, Mr. Kien, for answering these questions. Oh, I saw a lot of questions here. I will pick. And so the questions is, how important is the volume in stock market?
All right. The volume is used as a confirmation of our analysis, right? So if we identify the stock is in uptrend, but we look in the volume, you see we can use the volume as a filter. For example, if we find out 3 to 5 stock which has uptrend, Then we can use the volume to scanning for the stock, which had the rising in price and volume both. Because the strong rising price plus rising in volume as the signal for the strong trend. So the volume is important as the same as the price, but it must be moving the same direction. A strong uptrend go with the strong volume. So if you see a stock is in, you can draw an upward trend line. You use Fibonacci, you see there's a rising signal, but there is no confirmation of volume, or the volume is too low. Well, that the signal could be wrong. So we look for the one who have a rising signal plus a rising in volume.
Oh, thank you for the impressive answers, and thank you for the questions. You got a huge about questions. The next question is the long MA more accurate than the short one?
Yes, because in technical analysis, the longer, the more accurate. The longer the trend, the more reliable it is. So the long moving average gives the more reliable of rising signals. However, because they are long moving average and they have some lagging issues. So so if you use the long moving average in the competition, what doesn't make the chance that you can find a good uptrend or more reliable uptrend, but maybe it is lacking. When we figured out the price already moved in a few data already rise up to 10-20%. So if you want to use in the long term, 3 months, 6 months, or a year, you can use the 50-day, 100-day, or 200-day moving average. But for 1 month, we have to take a risk, for a short period, because your competition it lasts 1 month. And I think we have to take a risk by using the short-term MA. Don't be too short. 5 or 10 days, maybe the signal maybe have high probability to get false signal, but 20 days is short enough to give like a 50% probability to have a correct signal.
Oh, thank you for the knowledge. And I will move to another questions. Let's see. So the questions come from Nghĩ. What is the point to take profit for Fibonacci?
Fibonacci. Well, we use the Fibonacci ratio, so the 0.382, 618, or 237. We use that as the support and resistance level, and the support and resistance level itself can act as the buying and take profit point. So for example, if you buy a stock at a Fibonacci 0.5, you can take profit at the 0.618. You can set up any ratio. I think for safety trade, we can use the nearest ratio as the take profit, as the set the target.
So thank you for the answers, and I hope you will satisfy with these answers. And let's move to the next questions. The next questions is, how do we know whether if the sideways trend ends?
The sideways trend ends when the price break out of the trend. Like in the sideways, the price will moving in a horizontal trading channel. when the peak and the trough are equal to each other. So when you see the price break out of the peak, well, that's a signal that the sideways has ended and the price could move it into a strong uptrend. So you use the breakout to identify when the trends reverse, right? Like in uptrend, the price break out from the uptrend, it crossed below the trough. Well, that's a reversal for downtrend. Like so during the downtrend or the sideways, price crosses over, break out of the trading channel or break out of the nearest peak. That's a signal for the current trend is ended and the price will move into a new trend.
Okay, thank you for the answers and thank you Vy for the questions. And next, the questions is, does the demo market apply the T plus 2.5 rule?
Oh, I don't know whether you trade on the real market or the demo. For the real market, we have to use the T plus 2.5, which means you buy a stock and you can only sell it in the afternoon of the second day. For like tomorrow, Tuesday, you buy a stock, you can only sell it in the afternoon of Wednesday. It's on Thursday. So yeah, I'm not sure about the demo policies belong to the organizer, you know.
So thank you for the answers and thank you Quốc Thắng for the questions. Oh, you got really a lot of questions here. And next is, how important is the volume in the stock market? So
well, this question has an answer earlier. Well, we have to use volume as the confirmation of the trend. A strong uptrend must go with a high volume. Volume is increasing along with increasing price. So it will strengthen the trend and will be more reliable for the buy signal.
okay, thank you. And here is the next questions. Are we able to contact the trainer personally after the training sessions if we have more questions?
Well, you can send me an email. My email is kientt@fbts.com.vn. I can write it to the chat box. Right, here's my email. You guys can save it back. If you have any question, you can ask me.
Okay, Vile, you can look at the comment and send the email. Thank you, Vile, and thank you, Mr. Kien. And the next questions is come from Gia Bảo. The questions is, what are the factors that make strong resistance and support level?
Strong resistance. Well, we can base on the volume. In this case, we can use the volume. We can look at the previous peak, and you see there has a high volume on that peak, which means that a lot of investors are trapping at the price. And when the price going back to the peak, there could be a large selling force moving out. So we can use volume to identify the strength of support and resistance. Like a high volume in the peaks and the trough shows that there's a strong sell or the strong buy potentially. Secondly, you can use as the period. But the longer the period, the stronger the resistance and the supporting level. So for example, right now, the strongest resistance level of VN index is the peaks created in April, the 115 points. So when the market needs to break that peak to go into the very strong uptrend, or else it would just go in sideways from 1,000 to 1,500 into a big range. Right? You can base on the period. The longer the period, the stronger the resistance, and we can base on the volume. The stronger the volume in the peak and the trough, the stronger the resistance and the support level.
Thank you, Mr. Kien. And so there is limitations of time, so we will choose 3 questions to answer. And the first question is, let me see. Between the opening and closing prices, which is more important? The question is from Vân Anh.
The closing price is more important because it's the price that creates the signal. See, every indicator signals are generated from the closing price. And even if we use the candlestick, we want to wait until the price closes to create the signal. So if we want to enter a trade, we should wait for the closing price. You can use during the intraday, you can use the 1-hour chart. In one day there are 5 hours. We use an hourly chart. There are 5 candlesticks. So if we look at the closing price of each candlestick, can maybe generate a short-term signal. So based on the short-term based on the closing price to make your investment decision.
Okay, thank you for the answers. And the second question is, which one to be considered as support level? Long MA or short MA? Come from Nhật Minh.
For supporting and resistance, well, the longer the better. So we can use the long MA to identify the support and resistance, and the short MA used as a signal to entry the trade. Like we can use the 20 days moving average as the signal and the 50-day moving average as the support and resistance level. For example, right now, many stocks are below the 50-day moving average. So we can use the 50-day as the resistance level, and we use the 20 days as the buying signal. When price cross over the 20-day moving average, we buy and we sell when it hits the 50-day moving average. So the longer moving average are more reliable to identify the support and resistance level.
Okay, thank you for the answers and thank you for the questions. And the finally questions is come from Anh Hào. Which time frame are suggested to you when analyzing a stock?
Right. To analyze stock, we can start from the big time frame to the small one. Okay. To analyze the big trend, we can start with the weekly chart. The weekly chart always gives the strongest signal. On a weekly chart, we start from the weekly chart to identify the trend, and we can use the daily chart to identify the signal, the entry signal. For short-term trading for 1 month, you can use the daily chart to analyze the trend, and you can use the 4-hour or 1-hour chart to looking for the signal. So we can start with the big time frame. You will use big time frame to analyze the trend, and use the small time frame to looking for the buy and sell signal.
And that's all. And I think that is the last questions of the Q&A sessions. And thank you, Mr. Kien, for answering all the questions. And we were really glad to receive a lot of questions. And it's now time to wrap up the IIC Training Session 1 2022. Thank Mr. Kien for joining us and answering all the questions again. And for all of you guys here, if you have any questions or concerns, so please contact us via our official fan page or email, and the organizing team will respond as soon as possible. And that is the end of training section 1 of the Intelligence Investment Competition 2022. On behalf of organizing team, thank you so much and staying with us until now. And don't forget to follow our fan page and check our email frequently to receive the latest update on the competitions. And lastly, all the best with your journey at the IIC 2022. We wish you success and see you again in the coming rounds. And have a good night and stay safe. Thank you and goodbye.